Good evening, everyone. Dear students, today we'll continue with the first unit of macroeconomics, national income and related aggregates. This is the third part of this major chapter with a good unit and good weightage. This varies scoring as completely based on mathematical calculations. So remember that one of the questions out of 4 or 6 marker is going to be based on any. I know you are aware of the various methods, which is value-added method, income method, and the expenditure method. First, we'll talk about the value-added method. Value-added method is also known as output method or product method. I repeat, it is also known as output method or product method, as written on your screen, output method or product method. Why is it called so? It is called because it talks about the productivity, and with the help of productivity, it calculates the productivity of the country. That means GDP of the country. So the first step in this is, always remember to find the value of GVA at MP. As per the formula, we find the value of GVA at MP, which is nothing but GDP at MP. That means GVA at MP is similar to or equal to GDP at MP. That means the first step will take you to the value of GDP at MP. Now, how do we calculate GDP at MP or how do we calculate GVA at MP? So for calculating GVA at MP, there is a very short formula, which is very easy to remember also. That is GVA at MP is equal to total sales minus intermediate consumption plus change in the stock. Now, what is total sales? Here, sales means the domestic sales as well as the international sales. International sales, here I mean by exports. So whatever a producer is producing within the country or economy is now, after globalization, can be sold within the domestic market and can also be sold beyond the domestic market in the form of exports. So all the value of sales will be included here in total sale. Now, the sale can only not be the value, we need the net value. So for finding the net value, we need to subtract whatever intermediate consumptions we have done. So intermediate consumption has its two parts. It definitely has the inventory and the raw materials we have included during the process of production, that is raw material, RM. And the second is the various kinds of imports we do. Now, why do we include imports here? That is obvious that any economy, for making the purchases for the raw materials and for the production process, depends on two things. That is internal purchases, domestic materials or domestic raw materials. And the second is the purchases made from the international sources. Like total sales, in intermediate consumption also, we believe in domestic as well as international imports. Now comes this change in stock. You are very much aware of this. Change in stock or delta stock refers to nothing but the difference between the closing minus opening stock. I repeat, the closing minus opening stock. This you know because you have studied in accountancy as well. If you're a humanities student or science student, keep it in mind. Change in stock is the difference between the closing and the opening stock. Please have a note of it. Here it is written in the detail, as you may be required or you may be asked a theory question out of it as well. That means the wonder is that sometimes on this method, the question can be numerical, whereas the questions can be theoretical as well. So what steps do you need to write? I would always advise you to write the steps given in your textbook because that you will be able to revise. But even then, for your knowledge and your concern, first of all, the first step says that find the total sales. Total sales also includes the export. Then it also has the value of domestic sales. After adding export and domestic sales, the work is not done. Now we need to subtract the intermediate consumption. Intermediate consumption includes imports and also the domestic purchases. Domestic purchases of what? Domestic purchases of raw materials, as I shared with you in the last slide. Now, After adding them all, that means finding the value of sales and finding the value of intermediate consumption, we need to subtract them. After subtracting whatever value is there, don't forget the change in stock. The change in stock is the difference between the closing and opening stock. That is closing minus opening stock. I hope it is clear to you. Step 2. Once you have found the value of GVA at MP or GDP at MP, the work is not over. The work is actually started. Now, if you have to convert GDP at MP into NDP at MP, yesterday we discussed about the aggregates. For conversion of G to N, that means from gross to net. From gross to net. You can find the other alphabets here are same. That means the aggregates only here varies on the basis of gross and net. So for finding net from gross, we need to subtract depreciation. Now, in short, NVA at MP is equal to GVA at MP minus depreciation. What if we need to convert MP into FC? That can also be possible. Because if you have to find NVA at FC, that means you need to subtract NIT, which we discussed yesterday. NIT, that is net indirect taxes, which helps to convert MP into FC and FC into MP. That means market price into factor cost and factor cost into market price. How do we calculate NIT? I told you this yesterday, that indirect taxes minus subsidy is the value of NIT. So NVA at FC is equal to NVA at MP minus NIT. I hope second step is clear to you. Now, a very basic question here given to you, that is to find the value of NVA at FC. What is NVA at FC? It is net domestic product at factor cost. So to find this value, what all you need to do is, if you look first at the question, what are the components given? In a question paper, you will get the questions like this only. So what all you need is, first of all, you need sales as per the formula. Then you need is the intermediate consumption. Intermediate consumption, that means the purchases of the raw materials. Don't forget that sales and purchases of raw material also have to be included with import and exports. Do you find the value of import and export in this list? No. That means whenever the required items are not given in this list of the items, it means that is to be considered as zero. Don't take it. Don't bother yourself very much. So the first thing you took is sales, and the second thing you took is purchase of raw materials. So look at the value 540 and 140. Now see, it is written over here on how you solve it. The presentation part is also very important because you are a board student and your answer sheet speaks about your performance. So remember, first of all, write GV at MP is equal to sales minus IC plus delta stock, change in stock. So the value of sales we just saw 540, IC we just saw was 140. Now where did this change in stock come from? I already told you that change in stock is the difference between closing stock and opening stock. Look at this, closing stock and opening stock. Closing minus opening. Closing minus opening, 10 minus 20 is equal to minus 10. So 540 minus 140 is equal to 300. I'm sorry, it has to be 400. Now, out of this 400, if you see plus and minus, we algebraically know this very well, that plus and minus become minus. I repeat, plus and minus become minus. So the treatment over here will be 400 minus 10, which is 390. So the value of GV at MP is 390. But remember, the question was not about GV at MP. The question asked you, what is the value of NVA at FC? This was the question. This has been asked to you. So second step will be to find the value of NV at MP. So GV at MP minus depreciation is equal to NV at MP. What is the value of depreciation? As I told you yesterday, the depreciation is written as consumption of fixed capital. So here 5 crores is the value of consumption of fixed capital or depreciation. So you see 390 minus 5 is equal to 385. Now comes the last step, because we need to find NV at FC as per the question. So NV at MP and NV at FC has only difference of FC and MP. And we just now discussed that MP and MC difference is because of NIT. Now, where is the value of NIT? NIT means net indirect taxes, which has a formula of indirect taxes minus subsidy. Now, indirect taxes, nowhere written in the list. Please do not be upset. Nowadays, in most of the questions, an updated pattern of questions, indirect taxes is generally written as GST. Please look at this, children. GST is an indirect tax in India, which has subsumed all the types of taxes. Therefore, indirect taxes itself becomes GST. Now you need the second thing, that is subsidy. Do you find any subsidy in this list? No. So you see over here, I'm sorry, I just did not show you the value. This is the value of goods and service tax, that is 25. And as I just told you right 5 minutes back, that if there is no value given, consider it 0. So when subsidy value not given, please consider it 0. So GST minus 0 in the form of subsidy is equal to 25 only. And therefore, you see 385 minus 25 is equal to 360 crores is the value of NV at FC. I hope there is no doubt how you find the value of the value added method. Children, one thing I would like to tell you that in this type of method, that means value added method, there are 3 types of questions or 3 pattern of questions, which is very important for you to remember. The first pattern of question is just now we discussed, that is the value of sales, closing stock, opening stock, intermediate consumption, all are given in the question, and you need to solve by finding the value of gross value added as there in the formula, gross value added and net value added. That's so simple. And whatever aggregate has been asked to you, that is NDP, GDP, NNP, whatever aggregate has been asked to you, you can convert the given value into the other one as per the details given in the question in the list. Okay, but there is the other type of question as well in this value added method. What is that? The second type of question is when we do get the firms. Now look at this. When we get the firms, that is firm X, firm Y. Now, believe me, there can be such question in question paper where firms have been given. So when you need to find, as per the formula, what you need to find sales, you need to find intermediate consumption, and you need to find change in stock. So when you need sales, you will take the sales of firms. When you need intermediate consumption, you will also take the intermediate consumption of firms. And remember, you assume this is something which might not have been told you before. So listen to me very carefully. You need to believe that the entire country has only 2 firms, that is firm X and firm Y. So what Y is selling, firm X is buying, and what X is selling, firm Y is buying that. So you will have to take the closing opening stock purchases as per the list directing you. So let us take the formula now. Start with the formula. That is, first of all, sales. Let's calculate for X first. Sales by firm X. How much? 300. Then export by firm X. Is that given anywhere? No, it's not given. So for sales of X, we have only this value, that is 300, because exports nowhere is mentioned. Now comes his intermediate consumption. Intermediate consumption means purchases. So purchases by X from firm Y. This is the intermediate consumption of X. You see, is there any import also written? Yes, it is. That is import of raw materials by firm X, that is 50. So the value of intermediate consumption is 100 plus 100, 100 plus 50, which is 150. Now comes change in stock. Change in stock is closing stock minus opening stock. So closing stock of firm X and opening stock of firm X, that is 20 and 5. So 20 minus 5 is equal to 15. Now coming to the solution of this question. You see, value added by firm X, sales, IC, and change in stock. Sales is 300, I just showed it to you. Closing and opening stock of firm X is 20 minus 5 is 15. And the intermediate consumption of firm X is from Y 100, and the other one that is imposed 50. I showed it to you, that is 150. So putting all these values as per the formula, 300 minus 150 plus 15 is equal to 165. So this is the second pattern of question which is asked in this, that is firm-wise value addition or firm-wise value added method. Now comes as the third type of question. You see, there are multiple questions which we cannot cover up in this short period of time. So we'll proceed with the next question, which is of a different nature. Sometimes the question is given on the basis of the sectors. That means primary sector, secondary sector, and tertiary sector. So if primary, secondary, and tertiary sector type of questions are given, that is very much there in the reference books. If you refer to any textbooks like Sandeep Garg or VK Ori, there you will find this type of question where you will find that various sectors. So sector A is, of course, primary sector, B is secondary sector, and C is tertiary sector. So first of all, you will take the sales of primary, intermediate consumption of primary, and change in stock of primary. Then the same you need to do with the secondary, and then you need to do it with the tertiary. And accordingly means the formula is not going to change. Accordingly, the formula will be applied. So this is what is known as value added method. This is very, very easy and nothing very lengthy to remember about. What you need to remember that it can be a theory question also. So please do remember to write the steps. Do prepare the steps with the textbook very properly and thoroughly. Now, the second theory question asked out of this is the precautions question. The precautions taken while doing or calculating the national income with the help of value added method or product method or output method. So first of all, you should never include the intermediate goods. If you do this, that means if you include intermediate goods also along with the final goods, that means you're counting the value 2 times. And this is known as the problem of double counting. I repeat, children, this is known as the problem of double counting. For example, if I am preparing a bottle of perfume or I'm producing a bottle of perfume, which cost me 1,000 rupees as the final good value. Now, what I did is I added 1,000 into national income. On the other hand, the ingredients I put in perfume, the various ingredients along with the machinery I used, the energy or power I used, or the labor I hired, they all valued differently, 100, 200, 150. I added them as well. So if I'm adding the final good value along with the intermediate good value, there will be double counting in the national income for the same bottle of perfume. So we don't have to add the value of intermediate good. We just have to go ahead with the final value. And that's what is known as the problem of double counting. It can be an independent question also, that what is the problem of double counting? Remember the answer. Then second precaution is never add the second-hand goods. You know, many people buy and sell the second-hand goods like second-hand car, second-hand electronic appliances, and many more things. The sale and purchases of second-hand good are never the part of national income. Why? Because there is no value addition being done. It is just the transfer of the old good from one hand to the other hand. Here, it's not adding anything to the economy of the country. And if it is not adding anything to the economy of the country, we don't need to include or no way rational at all. You must have realized that no, it is not rational. It is just already existing in the economy and it is being transferred from person A to person B. That's it. Now, illegal purchases, smuggling, the theft, the robbery goods, and anything which is being sold after stealing or from chore market and all, are not going to be the part of this national income. So illegal goods cannot be included into national income. Now comes is the value of the leisure items. That means the non-market goods should also not be included. There's so many things which some people retain with them for their hobby or for their leisure or for their extravagance. So they are not to be a part of national income. This is their personal leisure. This is their personal hobby. This cannot be affecting the national income. Now comes is the transfer income. I yesterday told you factor income and transfer income. Transfer income is an unearned income. It doesn't have any obligation. It doesn't have any kind of liability against it. So the transfer incomes are never part. I yesterday gave the example of the sorry, payments like scholarship given to the students. There are different type of scholarships given to the students. There are old age pensions given by the government to the old. There are many more funds which are given for welfare. So these kind of transfer payments are not the part of national income. Now the question is why? They're also being circulated in the economy, but why not? Because they are not earned. No value addition has been done to get them. That is just being transferred from one hand to the other. That means from government's pocket to a layman's pocket. It's not adding any value to the economy. It's not helping the economy to grow. Therefore, transfer payments are also not a part of the value added method. Then comes is the income method. This is the easiest method. And I would always advise you with my all expertise that if you have question in options to solve income method with any other method, you must go ahead with income method. It's so easy and chances of mistakes are least. So for formula of NDP of FC, actually for calculating income method, the first step takes us to NDP at FC. This is the first step which takes us to NDP at FC. So for calculating NDP at FC, let me tell you for value added method, we were reaching at GDP at MP. But here we are reaching at NDP at FC. So what all you need? You need COE, compensation of employees. You need OS, operating surplus. And then you need MI, that is mixed income of self-employed. Remember, only these three words. That's it. But they need to be elaborated. So what do you need by compensation of employees? I just give you a second to note it down. This formula, as I said, that it's very, very important and very scored. Compensation of employees, as it sounds. Anything earned by an employee from employer is known as compensation of employees. I personally define it like compensation of employee is anything and everything. I'm sorry, anything and everything which is given by employer to the employees. I repeat, compensation of employees or COE is anything and everything which is given to the employees from the employer. Now, how are they given? They can be given in the cash, that means wages in cash. They can be given wages in kinds. Wages in kinds means education facility, medical facility. Sometimes house and home allowances are also given. Sometimes employers' contribution is also then social security schemes like PF scheme, medical insurances are purchased. Of course, for pension and retirement schemes, the employer contributes the part. So all these things are the part of the compensation of employee. Children, believe me, right from a cup of coffee to the expenditure on internet, to the car, to the petrol expenses, or the education expenses, or the contribution in PF, Provident Fund, or the contribution in medical expenses, everything is the part of COE. If your parents are working, ask them that what kind of compensation are they receiving from their employers, and they are all the part of compensation of employees. Believe me that this is very easy to identify, because when it is given there in the question, most of the time it is given COE directly. Very easy to identify. You will be lucky enough if you get COE directly. If not, then you hardly will get all these terms, that is wages in cash, wages in kinds, employer's contribution to social security scheme, and pension or retirements. Now comes his operating surplus. Children, this can be sometimes an independent question. So this is very important. Generally, operating surplus or OS is asked independent question in a 2-mark, 1-mark, and 3-mark questions. What does operating surplus include? It includes 3 things. The first is rent. That can be actual rent or imputed rent. It is royalty. It can be interest. Interest is only not for personal things. That means if a person has even deposited the money in the bank and is receiving the is receiving the interest, so that is also part of national income. And then comes profit. Profit has 3 parts, that is corporate taxes. See, when you are an entrepreneur, you earn profit. But once you earn the profit, you cannot keep all the profit in your pocket. You first of all need to give a share to the government, which is known as corporate tax. Secondly, you need to use that particular money to redistribute it to your investors. Multiple times, we have multiple investors in our own firm, in our own industries, individual or in the form of group. They also claim some profit. So that profit share, which is given or shared among those investors, is known as dividends. Then comes as retained earnings. Retained earning is the part of the emergency fund or the savings of the firm, which is kept aside for future uses sometimes. This can also be used for the reinvestment in some new projects and new schemes. And the last, which is not written over here, is undistributed profit. Profit cannot all be distributed. As you can see here, corporate tax given to the government, dividend given to the investors, retained earning kept for the future. But the person who is earning profit also can be a consumer. So he also needs some share. So that is known as undistributed profit. So these are the 4 parts of profit which you need to remember. Undistributed profit, corporate tax, dividend, retained earnings. So this is CDOR. Now, OS must be clear to you. I once again go ahead with this, that is rent, royalty, interest, and profit. Profit has corporation tax, dividend, retained earning, and also undistributed profit. Mixed income. Mixed income, I can claim that 110%, it will be directly given in the question. What is mixed income? Mixed income of self-employed is the income which is being generated by the self-employed workers in the economy. For example, farmers, barbers, tailors, gardener, sometimes they can be some teachers who are not associated with a school or coaching. Sometimes they can be the doctors who are not attached to a hospital. They are working for their own. The various shopkeepers, the various traders, the businessmen, they're all self-employed. And the income earned by them is also incorporated in national income, which is known as mixed income of self-employed. So including them all, that means going back to the formula, including them all, COE, operating surplus, and mixed income, you reach to NDP at FC. Now, if NDP at FC has been asked, it's okay. But if you have to find the national income, as I said yesterday, means NNP at FC. So to find NNP at FC, you need NDP at FC plus NFIA. We yesterday discussed NFIA is factor income from abroad and factor income to abroad ka difference. So FIFA minus beta. Now, including this formula, you get the value of NNP at FC. So this is the second method. As I told, it is very easy, very, very simple to remember and solve. There's a question for you. I just now told you that COE. is generally directly given. You can see in the question also it is directly given. Then comes is mixed income of self-employed. In this question, you cannot notice mixed income of self-employed. That means mixed income is zero. Whatever component as per the formula not given, it means the value has to be taken it as zero. Then comes is OS, operating surplus. Operating surplus, rent, interest, and profit. Here you can see profit is nowhere directly given. So dividends, undistributed profit, corporation tax will be the part of profit. So adding them all, you will get the value of NDP at FC. What you have been asked is GNP at MP. So I'll show you how it is done. See, NDP at FC is equal to COE, OS, and MI. So value of COE 400, as I just showed you. Rent is 20, interest is 30, and profit has to be made by dividends, undistributed profit, and CT, that is corporation tax. So 45, 5, and 10. Now let us add them all. So 400 plus 20, that is 420, plus 30 is 450. And here the addition of profit is 60. So 450 plus 60 is 510. This is the total of NDP at FC. Now, as I just told you that the question is asking you GDP at FC. So to convert GDP or find GDP from NDP, what difference you find is of only one alphabet, that is N and G. G here is gross and here is net. So what you need to do here is you need to convert net into gross. And for converting net into gross, we need depreciation to be added. As per the question, the value of depreciation you can see is consumption of fixed capital, which is 10. So I'll take 10 here. 10. 510 plus 10 is equal to 520. So as per this, GDP at FC is 520. But the question asked you the value in MP, market price. So one more thing is there to be done. What is that? To convert GDP at FC into MP, you need NIT. I repeat, you need NIT. So here is the value of NIT. NIT is net indirect taxes. So net indirect taxes here is being given directly, which is 50 crores. So you see 520 plus 50 is equal to 570. So you can see that 570 is the value of GDP at MP. Now, one more twist, that in this question you have been asked about N. N is national. But what we have calculated so far is GDP at MP, that means domestic. So the other difference we need to find is between D and N. Here, this D and N. So converting national from domestic, we need NFIA. Is the NFIA value directly given in the question? Yes, it is given. Net factor income from abroad, which is minus 10. So as per this minus 10, you see 570 plus minus 10. Plus minus is equal to minus, of course. So 570 minus 10 is equal to 560 crores. So this is the final answer as per the income method. So here we implemented the formula up to here. And here we implemented the value of aggregates as we learned yesterday. And the best thing in this is there is no different types of questions put out of this particular method. A single pattern of question which we just now discussed. That is the formula based COE plus OS plus MI. I would definitely suggest you students to go ahead with at least 20 questions from each formula till board exam so that you are confident enough. There is only plus and minus, and all these plus and minus will give you full marks. So do not take a risk with theory. Theory always always has the chance to lose the marks, whereas it has a chance to get 100% marks if your answer is correct. Now coming to the precautions of the national income with the income method. First of all, we never include transfer income as I discussed in the last topic. We also do not include the money from illegal activities because economics never talks about any illegal transactions. It It never studies about any illegal transaction. It is also not going to talk about the second-hand goods sale and purchases, at leisure time activities, money earned by the leisure time activities. It also does not talk about the income earned by the selling shares, dividends, and the equities. Here, except the last point, all the other points have been repeated. So there's a tip that if you prepare all these common points, you can write the precaution of two methods. So it's called as killing two birds with one stone. So prepare all these points seriously, write them seriously if it is a theory question about the precaution. Sometimes it is also asked like, they give you the conditions and they ask you that whether they will be added into national income or not. So then you need to match them with the precautions. If they're matching them with the precaution, then they are not to be added with the national income. Now explaining the last point. Selling in shares, selling and purchase of the share. Why are they not included in the national income? They definitely are part of economic activity. But remember that selling shares and purchasing shares are not going to add into any of the value addition to the country. And they're also not being earned by anybody. They're unearned income. Unearned income, why? This is just the transfer of ownership. Because this is just the transfer of income, transfer of ownership, they cannot be the part of national income as they are not the factor. Then comes this expenditure method. This is the last method and very easy again. I would go ahead with the method directly. It also talks about GDP at MP. Children, let me tell you, value added method and expenditure method, first step takes you to GDP at MP. But income method, first step takes you to NDP at FC. Remember, this is very, very important. Now, for GDP at MP here, we need three things basically, that is PFCE, GFCE, GDKF, and we can also call it GDCF and net exports. I'll one by one tell you what they are. PFC is private final consumption expenditure. I repeat, private final consumption expenditure. Private final consumption expenditure means it is nothing but the expenditures made by the household. It's sometimes made by the household and sometimes made by the government also. See, government also makes some kind of household expenditures. Sometimes non-government organizations also make the household expenditure. So any kind of household expenditure are the private final consumption expenditure. Then comes this government final consumption expenditure. Government final consumption expenditure can be of two types. That is, of course, as I just mentioned, that the government does consumption expenditure. What kind of consumption expenditure government does? Government does have some expenditures related to food, related to stationery, related to fuel, like they have their transport. They also have to make the payments to their hired workers. They do have some expenditures related to tourism, implementation of programs, schemes, and many more things. You see, 26 January is very close. So when the government is having a huge event like 26th of January, which is our Republic Day, the government will have to make a lot of expenditures. And these all expenditures will be known as the government final consumption expenditure. Why are they known as consumption expenditures? Because they are not going to add any liability or reduce any liability. They are not going to reduce any asset or add any asset. Therefore, they are the consumption expenditures. So the second part is GFCE, that's government final consumption expenditure as per the formula, as you can see over here. Private final consumption expenditure, government final consumption expenditure. Now coming to GDCF or GDKF. GDCF or GDKF stands for Gross Domestic Capital Formation. Here actually C has been replaced with K because in economics capital is denoted with K. Therefore, GDCF is actually GDKF written in the formula. But No matter. If you write GDCF, it is absolutely acceptable and you will get full marks for it. So GDCF is gross domestic capital formation. Now the question is, this is a little complicated part of this particular method. So listen to me very carefully. Gross domestic capital formation means the value which is being created by the formation of capital. Like if you see around you, there's so many production work going on. Sometimes it's done by the government, sometimes it is done by the private. If it is done by private investors and producers, or if it is done by the government, in both the cases, it is the capital formation in the country. Now, capital formations are of two types. The first is fixed capital formation. Domestic fixed capital formation means setup of big industries, setup of big factories, setup of machines, purchase of big machines or capital, like sometimes the farmer purchasing a tractor, sometimes the electricity department purchasing the transformer. These are all the fixed capitals, whereas the other is the working capital. See, the production work, it's not possible just with the fixed capital. It also exists with the working capital. So working capital means the raw materials and the stocks we have. That means the inventories, the change in stock. So adding inventory, that is change in stock, and the fixed capital, we get the value of GDCF. So in other words, GDCF is equal to gross domestic fixed capital formation. I repeat, gross domestic fixed capital formation along with this change in stock or change in inventory. Then comes is the value of net export. Net export is nothing but the difference between export and import. I repeat, net export is nothing but the value of or the difference of export and imports. So adding PFCE, GFCE, GDKF or CF and net exports, you get the value of GDP at MP. That's not the final thing to get. It depends on the question you have got. If the question is asking you only about GDP and MP, then your answer is there. But if you are being asked about NDP at FC or NDP at MP or NNP at FC, anything, you need to then convert your answer as per the aggregates. Here I bring an example for you. You can see that you have been asked to calculate gross national product at market price, which means GNP. And what you get is GDP. That means you have to first calculate GDP and then you have to convert that into GNP at MP. Now, what were the components we need as per the formula? Private final consumption expenditure, government final consumption expenditure, gross domestic capital formation. Do you see gross domestic capital formation? No. But net domestic capital formation is given. So to convert net domestic capital formation into gross domestic capital formation, we also need consumption of fixed capital. That means these two together become gross domestic capital formation. Correct? Now what you need is, the fourth one is net exports. So we got all the four values. The values can be added: 10 plus 400, 410, then 100, 510, and 50. That is 560 and 570. Let us solve this for you. As per the formula, GDP at MP is equal to PFCE, GFCE, GDCF, and net exports. PFCE given in the question, 400. GFCE given is 100. GDKF or GDCF was not directly given. In fact, ND, CF, and depreciations were given. I asked you to total them. So 50 plus 10 is equal to 60. So totaling them all, I found 570 for you. And this is here on the screen. The same value has been given, right? Adding them all, including net exports, the same value I found, which we totaled in the last screen. You see, 100, so 10, 400, that is 410, 510, 560, and 570. But this is the value of GDP at MP. And what question is asking you? GNP at MP. So to convert GNP at MP from GDP at MP, what you need is domestic को national बना देना है. We have to convert domestic into national. Excuse me. So we need to add NFIA. NFIA value, let us see in the question. NFIA is minus 10. So you can see that 570 plus and minus 10 is equal to 560 crores is the answer. You must have realized that this is so very easy, and that is why I have been reiterating that you need to focus on this and try to score 100% marks out of it. Now, the precautions of the last method. This is again a theory question. Sometimes, in fact, the precautions are always there in the question paper. One of the precautions can be possibly there this time as well. So the income method done, value added method done. This is the time for expenditure method. The first thing, this time again, we do not add the intermediate good. Otherwise, there will be problem of double counting. We also do not add the second-hand good purchase and sales, as I've already explained. It also does not include any kind of expenditures made for transfer payment, as I just told you, because transfer payments are unearned income and they're not the part of national income. Only the factor income can be included. Any illegal activities are never considered in economy. And the expenditures related to the leisure time activities and produces or purchases are also not the part of national income. Now, here I would like to tell you two things, children, as exception. Listen to me very carefully. Of course, the purchase and the sale of the second-hand goods are never part of national income in any of the methods. But nowadays, for the sale and the purchase of second-hand goods, we now take help of the broker services. Like for buying and selling car, there are so many companies helping us. So if you're taking the help of any such company, they have their own commission, which is known as brokerage or commission. So if you are giving them commission, this has to be included. Why is this to be included? You give them commission or brokerage because they work hard, because they have helped you, they have provided you the service. And against that service they have provided to you, you definitely tend to make a payment to them because that is their factor income. And factor income is always a part of national income. The same goes with the stock market. Any kind of transfer in stock market, like buy and share of the stock market, shares, equities, sorry, they are not the part of national income. But when there's a brokerage given for the buy and sale of the stocks, they definitely will be the part of national income, as they are the earned income, they are the factor income. That's being paid against the service they have provided to us. So I hope this unit you enjoyed, you learned, were very easy. Do prepare the numericals of nominal GDP, real GDP, and the deflator as well. What is nominal GDP? I told you yesterday. Output into current year prices. That's nominal GDP. Real GDP, I told you, that is output into current year, output into base year price. And the other method to find real GDP with the help of nominal GDP is nominal GDP upon current price index into 100. What is current price index? This is the formula. That is sigma P1 upon sigma P0 into 100, which you learned in class 11th in index number. So you're already aware of it. We discussed about the GDP and welfare in detail. We talked about externalities and all. Now the last formula, which is deflator. GDP deflator is very, very important. I could observe it in multiple sample papers, so don't avoid it. Do solve it. GDP deflator is equal to nominal GDP upon real GDP into 100. This is a very basic formula. Nominal GDP, I just told you how to calculate. Real GDP, I just told you how to calculate. put the values, multiply them, and then get the answer. That's it. So here, the chapter and the unit is completed. There is a bonus information for you. I know you are running short of time. Just take 2 minutes. I've already told you the problem of double counting in mid of the session. The double counting is a problem where we, if by mistake, include the intermediate good value, there we get the double value. But this I didn't tell you. This is very, very important. That is, how can we avoid the problem of double counting? So there are two ways to avoid the problem of double counting. First, just take the value of finite goods, or that is the value addition method. That means subtract the intermediate consumption from value added. So either we go ahead with the value added method, that means subtracting the value of IC or intermediate consumption. Value added method, I repeat, subtracting the value of intermediate consumption, or just take the value of final goods. Don't go and touch the intermediate good at all. Don't include the intermediate good at all. So these are the two ways how we can avoid the problem of double counting. This can be a 2-3 mark question in the question paper. You must be wondering, ma'am is saying again and again 2 marker, whereas there is never a 2 mark question. Actually, children, sometimes there are sections in same question, like 4 marker can have section A and B. 6 marker can have section A, B, C. So it automatically and by default becomes a 2 marker. That's it. I hope the class was beneficial to you. Do revise this unit. I reiterate that go ahead with the practices of numericals, solve at least 20 numericals based on the methods, and do not avoid the theory, because theory can also be equally important. This time what I saw is they are giving you optional question, that is one numerical. Against it, there is an optional question of theory. So go ahead with the theory of this chapter as well. Thank you so much. Goodbye.